Hey, what's up, guys? Qui-Gon Jinn here, back for another update. This video is for the Bitcoin weekly candle close. Here's my Twitter handle right here at Qui-Gon Jinn. So follow me over there on Twitter. If you want some, I'm going to be posting some updates, some TA, some metrics. Pretty soon, I'm going to be posting updates over there. Also, I'm looking to collaborate with, some other content creators. You can also see stuff that I, liked and shared if I retweeted another post, something that I liked from another user. You can see whether or not I agree with them there. You can also comment. Also, if you have any questions or anything, you can also hit me up there, message me, or comment on one of my posts. So anyway, yeah, Twitter, X, at Qui-Gon Jinn. Follow me there. So, Bitcoin weekly candle close. Honestly, guys, I don't really have too much to say about it because it was a little bit disappointing. So what this thing actually is, this is the weekly candle. What this candlestick is called is a doji, which is an indecision candle. It's more or less a doji. A doji has a really thin body with long wicks on either side. So I guess you could consider this a long-legged doji. But in any case, it's a doji. It's an indecision candle, which really means that the price wasn't able to decide exactly what it wanted to do. Yes, we did have a nice bounce off of the bottom of this wick, because you wicked all the way down to 48.8, and you ended up closing at 58.7 almost. So yeah, nice bounce, but you failed to close the candle body up towards the top of the highest end of the wick. And I will zoom in a moment and give you a better idea of the price action that's emerging on the lower time frames. But for now, if we're focusing on this, basically you can see that you had this large bounce and then it traded in a very tight range for a long period of time. And we were talking about this on the last video, I believe, how Bitcoin was just got above 60K and was trading just around 60K for over like 30 hours, I think it was. Now, it would have been really nice to at least see Bitcoin close above 60K, or the weekly candle close above 60K. But unfortunately, that didn't happen. I was looking for something more like a bullish hammer, where you get, I guess it kind of doesn't let me draw that way. But if we got something more like this, where the candle body was more full towards the upside here, it would look a lot better. But what we got instead was this doji, which, like I said, the price wasn't able to decide. So another thing that the price failed to do is we also failed to close the weekly above the 21-week EMA, which right now is sitting at 61,244. So we failed to close above that. It looks like we got up to it and pretty much wicked off of it, wicked out of into the center of the bull market support band, and then basically rejected from it. And this is something that I was talking about. If you watched a few videos back, I was saying that you were above the bull market support bands this whole time. Damn it. You're above the bull market support band this whole time, and the time that you got below it, when you first started closing below it, you can see you came up and wicked down. You wicked up to it and then fell down again and consolidated further. This took about like two months or so before you really were able to close back above it again with a weekly body. I mean, you could argue that it was here, but you had that one more pullback to create that higher low. and then this candle engulfed and closed above it. But what I am trying to stress is that if you see this cross here, that is the 21-week EMA crossing below the 20-week SMA. The 20-week SMA getting above. So you came down and tested it here. Now this is back in like over a year ago, last summer. You know, from April to June. You came down, tested it, bounced from it. We're back above it for a while, and then you fell back below it and ended up ultimately closing below it. When you had your first rally back up to it, you rejected from the 20-week SMA. So what I'd like you to take a note of there, or what I'm trying to stress here basically, is you had this cross here where the 20-week SMA went above the 21-week EMA, and the 21-week EMA was below. Now when you really started getting charged back up, and you got this candle that ended up breaking this whole zone here, this 30K zone, you ended up getting this cross back over. So the 21-week EMA crossed back above the 20-week SMA. And ever since then, so you had this crazy rally from the ETF news, consolidated a little bit here, almost returned to it, but bounced higher. You had this whole crazy rally, right? And now here again, you came back down and retested it once more, just like you did back here. So you came down and tested it, bounced off of it, which is what we did right here. When you closed below it the second time, like I said, a couple months consolidation before being able to break back above it. And during this period, the 20-week SMA was above the 21-week EMA. So I think, long story short, I think if we want to see the next stage of the bull market, and Bitcoin is actually going to push up into new highs, like that 80, 90, 100K zone, really we need to see, what would confirm that for me is we need to see this type of cross happen where the 21-week EMA crosses back above the 20-week SMA. So just to note again how similar this looks, how you came down, bounced off of it, got above it again for a while, closed below it, a few months of consolidation before you actually went. I think we could be diving into something a bit like pretty similar here. Came down, bounced off of it, came back up above it, sort of tested a relative equal high, and then ultimately ended up closing back below it. Now we're below it currently, and if you can see, before we tested it here, you had the green on top, red on bottom. And then when we closed below it, the green was on bottom and the red was on top. Here, same thing. When we tested it, the green was on top, red was on bottom. Now, the red is on top, green is on bottom. So we're falling through it again. So it looks like we're more or less going to continue to sort of reject from it, or not reject from it, but it's probably likely going to be resistance. And that could be the case for maybe even a couple months. And I was talking about how September is really probably, I was thinking about how September is really probably more likely where we're going to bottom out. And October, or towards the end of October, might be where we start to rally again and we get that Halloween effect. Like we see so often in crypto. You know, a lot of times, I don't know if I'd say it's every year, but most times around Halloween or on Halloween, crypto is just ripping for some reason. So anyway, that's a big key thing that I wanted to point out, below the bull market support bands. And until we get back above that and we get our green back above our red, I don't think that Bitcoin is necessarily going to be going into price discovery. But also, in order for that event to take place, there's going to have to be some significant price action that pushes this moving average back above that one. And down here, you can see that the gap between the two was not very wide. You know, it was probably only a couple $1,000, or only $1,000. But right now, the gap between the two is like, $2,800, something like that, about $2,800 difference. So that gap is going to have to be closed, and this green has to get back above that red. So overall, it's not necessarily a bearish candle close, but it's not necessarily that bullish either. I do like the fact that you came down to the 50-week SMA and you sort of wicked back above it, and you had this long wick on the bottom side. But it still isn't saying exactly enough to tell us whether or not it's ready to bounce from that level, or if some more consolidation is needed. Also, like I mentioned, I was hoping for something that looked more like a hammer, and I was saying that would be bullish, but also something to consider is this evening star pattern that formed right behind it. So those are a few things that got me concerned. Also, if you look on the daily, you can see that death cross that I've been talking about for over a week now, it did actually occur, and it looks like you rallied back up into it, but then you more or less rejected from the 200 daily SMA. So we still have yet to close any daily candles back above the 200 daily SMA, which is kind of a more or less, it really is a bit of a red flag, rejecting from it like that. But then again, you did reject below it over here a few times before actually putting in higher lows and ultimately getting back above it. So I'm not too worried, but at the same time, it's just not great. Maybe it's just another signal where we need to come down and do some further consolidation before we can get back up there. So I want to look at some levels and explain basically my thought process with this and where we're going now. So you did have, I think in the last couple of videos, I was saying you did have two consecutive candle bodies, or this was the third one. This one closed today below 60K, obviously. So we had three consecutive bodies closing above 60K, and now this one has closed below it. So that's another red flag on the daily. And if you guys remember this box, I call it the magic box that I drew, I said it was important to be holding that level. So if we just go down to the 4 hour and the 1 hour, I guess I'll break it down to the 1 hour. You can see that I had mentioned this golden cross on the 1 hour and saying that was a sort of a pretty good sign. Ideally, it would have been good to have held this 60K zone and then pushed above. But now that we've had the golden cross, I believe I also mentioned that a lot of times you can fall into a golden cross as long as you're held, or you can fall after a golden cross as long as you're held by the 200 SMA. And it looks like it's really more or less hanging on for dear life right now. It doesn't look great. I'm going to be honest with you guys. It doesn't look great. And my theory of holding this trend line, I believe in the last video I mentioned how this trend line, we were just coming into contact with this trend line. And what would sort of change my mind is if we lose this trend line, reject from the bottom of it, and then go down further. And that would sort of get me more on the bearish side. Well, we kind of more or less did that. You can see that even though we didn't really break down from it immediately, we did break through it and then came up, tested it. You can see there we sort of tested it here, tested it there, and then also inevitably ended up rejecting from it there, and then boom, just bigger moves to the downside. It's also, Sunday, and I'm still trying to work out my theory as to whether or not I think BlackRock and the other ETF managers have to do their rebalancing and such on Sunday night. For some reason, I think it's like both. It might be just easier, or because it's the weekly candle close, or because it's the day before Monday when the market opens again, and they need to have everything rebalanced. It might just be easier for them to do it Sunday night. So anyway, I don't know. I don't want to ramble on that topic too much because I want to stick with the price action here. And what we're doing now was the more bearish scenario that I had. You can see where it's kind of rejecting from the bull market support bands, rejecting from that 62.3, but more importantly, still below this 61.350 area, which is the yearly candle body, or no, the monthly candle body support zone. We failed to take back that zone. It was good that we were seeing some consolidation above 60K. That was a good step. And if we had gotten above 61.350 and started continuing to close above it, then it would have been much more optimistic. But unfortunately, that's not what happened. You ended up losing this trend line, and then you rejected from the bottom of it. So now we really kind of don't need this anymore because it's more or less invalidated. I was just showing that trend line to, sort of back up what I was saying before as far as like when is it going to start looking more short-term bearish. So another thing that happened is now we're losing this zone here. And I was saying that it's actually really pretty important that we hold this zone. And you're starting to dip down below it. I mean, there's a chance you could get caught with the 200 here and have a smaller rally back up to 60K and then get rejected. And then hit this, 57.5 area. You might get some reaction there. And then still end up rejecting from 58.5. And coming all the way back down to 54. But I also wanted to sort of check on some fib levels because I want to see if these, now that we've ended up topping out here, I want to see if any of these fib levels actually end up lining up pretty well with where we could expect to find some support. Just give me a second as I readjust this. Okay, so now that we've dropped this far and we're sort of losing this zone, ideally, so at 57, around 57.5, you have a 382 retracement there. These are just short-term fibs, so they're not as heavy as, they can't hold as much weight as long-term fibs. But it is nice that this fib level happens to meet up with this support resistance area right here. So it is nice that that matches up there. So you might be able to see some sort of reaction at 57.5. But unless sort of oscillators cool off and people start really stepping in to buy the dip, as you'd say, then I think there is potential to go lower. So my bearish scenario was really kind of this. It was like, okay, we come back up, or maybe we drop a little bit lower, come back up, reject from this, fall through that level, and then come back up for a bearish retest of this level here. Those levels being, so bouncing from 57.5 potentially, and then potentially rejecting from 60,000, falling through 57.5, potentially bouncing from, 55.8, rejecting from 57.5, and then maybe finding some support at 54.1. So that was kind of my idea for a short-term bearish scenario, because if you actually look back here, you can see that these wicks, or where it sort of bounced or sort of double bottom there, like this is essentially a liquidity zone right here. Between these all these wicks right here, there is liquidity down here. So that is a liquidity zone that could potentially get swept for long positions that are potentially over leveraged. And it just so happens that that lines up with the 618 level and just above 50, 53.2, which is this, you know, short-term level of support resistance. I mean, I don't even know if I would really count that anymore. I think it's too far away from the more immediate thing. It was just like a short-term level that it would have been good to flip. But anyway, I'll leave it on the chart for now. So it kind of seems to me like this is going to be the new zone. If this scenario happens, this is going to be kind of the new zone that you're going to want to hold, because you're losing this one. So you are losing this one. We might have to dip down again, potentially put in a higher low and have the price consolidate sideways a little bit more before it can give it another shot. You might have to just go sideways before it can give it another shot towards the upside. You know, something like that, which sounds really freaking boring, but, you know, sometimes that's just the way the cookie crumbles. And there's liquidity zones where people are getting knocked out going long and short all the time. And so if we actually look at that, you can see that there's more and more short liquidity building up above the price, but then there was also all this long liquidity building up below the price, and that's why it looks like another reason why we had this sort of drastic drop. When you see these big drops like this, I'm really a believer that it's not a coincidence. It's not like someone just decided to sell off a bunch of Bitcoin all at once. It was like, okay, there's liquidity here. It makes sense that, say you're a market maker, liquidity provider, whatever, and you have an algorithm running your whole operation, it makes sense to go and liquidate people that are over leveraged, and then the exchange gets money for fees, and market maker, you know, a lot of times will get the money that was put into the trade that the trader was liquidated for. So that's why it's a good idea to keep an eye on these liquidity charts. And so if we go up, so that's just the 3 days, so it's a shorter time frame. If we go up to, I guess the 1 week would sort of suffice. You've got this 53.6 to 54.3 area, sort of where you can see a lot of liquidity built up here. And this was that zone that I was talking about, how this is a liquidity zone that is probably likely to be swept before we can actually really continue up. And if that's going to end up being the target, whereas you had so much liquidity building up at 60K and liquidations just below 60K, that's probably, you know, heavily responsible for the move downwards. And I would think that this would probably be the likely next target, is this zone here. And I mean, I can even bring it out to the 2 week to see what's going on there. See if there's any, yeah, so you've got kind of, it's not really a hot spot, but you've got quite a bit of liquidity down here between, like, you know, it's 53.6 to 54.6 area. So if you were to sweep these lows, these two lows here, you would kind of clear out the leverage on the long side once more before charging back up and then going for this hotspot. Because guys, this hotspot at 67K is still there, and I still really believe, you know, you're chipping away at liquidity here, and now there's even more built up. People are thinking because the price is bearish that it's going to be okay to short and that's the good move, but there's more short liquidity building up here, and it's just going to become more targets in the near future, I believe. So if we were to come down to that level, sweep that liquidity, and then the target becomes the upside again, the upside liquidity. So that kind of coincides with this area on the chart, you know, the 54, 53, 54 area. So I would say that this area really, it would be much better for this area to hold. And I'm actually going to stretch this out a little bit and go back to the weekly and see what that sort of looks like. And you can see that look, so you didn't get any bodies closing below this level here, around 55.8. So we haven't seen a weekly candle body close below that, you know, since before March. So you can see that this zone here, this is clearly clearly something of a demand zone. So this is the zone that we're going to want to hold ultimately, guys. If we do fall below that 57.5 area, then this is the zone we're going to want to hold. Probably 54,100. And so we're going to leave that there actually for now. And I'll lock it for now. And we're going to go back to the 1 hour. All of this consolidation, it should act as some sort of support level. And I mean, if you look, this sideways price action, I mean, I don't think it's really, you got something sort of similar back here. And actually, if we take a fractal, I'm actually curious as if I took a fractal from here, I guess we can bring it up to there. I just want to see how similar this looks in terms of all these liquidity sweeps that happen. And I mean, my God, guys, that's honestly pretty uncanny. It's almost identical to what we've been seeing. I mean, not like, I wouldn't say it's identical, but you know, it's pretty damn similar. You know, so I could see something like this happening where come up, reject, come down to this area one more time, get this fake out, and then it takes a couple tries to actually get back up towards the top of the range here. So I mean, you can see how that would kind of fit up with the little projection that I have drawn there in the red as well, and also how it fits up nicely with these levels here. So I don't know, that's what I'm thinking, guys. I think that losing this zone was like really the first bad signal. Ultimately, you're going to want to hold these zones here, but we could have to endure, we might have to endure some liquidity sweeps on the way, but I still believe that 67 area is a target for liquidity. You can see it right there on the chart. It's still a hot spot, and there's even more building up. There's another little hot spot here at 62.9. So we basically failed to meet the criteria to be bullish immediately, and then you can see this rejection from 61,350, and you see what happened there. So that's kind of my thoughts as to, now that we had this drop, if we don't hold the 200 here, I'm thinking that something similar to that projection is going to happen. So just keep those numbers in mind, like the 54.1 area. We might end up having to go back down there again just to sweep that liquidity, just so that it's all out of there. And then maybe we can go up, and then maybe we can give it another try to clear 61,350 and 61,500. Because we really need to, for anything significantly bullish to happen, we really need to get back above the 21-week EMA, and ideally back above the 20-week SMA. But you are still above the 50-week SMA, so that's nice that we're still above that. And you're trying to hang on to the 50 SMA on the 4 hour, and you might just lose it. But if you do lose it, it's probably only going to be temporary. And if we do lose this zone, then we're probably going to have to start talking about making lower lows, like somewhere around 46. But we haven't lost that zone yet, so might just take a little bit more consolidation, guys. Ultimately, those are the levels you want to watch out for. First, you could look for a reaction at 57.5, and then I say 55.8. If that fails, 54.1. And if it does go down that low, liquidity will be swept. Now, oh yeah, this chart. I just wanted to bring this up because I opened this chart today for the first time in like a couple weeks, and it looks like this little green projection that I had just a scribble on. Looks like it kind of ended up, it's starting to play out, which is, I don't know, a little troubling. It calls for somewhere down here around 50K again. I was expecting a slower dip down. I didn't expect, I expected it to bounce here and then come up to this level before rejecting, but we ended up getting this big huge dumpy dump. So anyway, yeah, forget that chart though. Others market cap, not struggling that bad. You are back above. I believe you're back above the 1450-day SMA, which I'm not sure why it's not showing on the chart, but you know, this level, this 181 billion. I mean, it's good to be above that. If we do dip down into this box again, which I'm sure we will, I don't know if it's going to be sooner or later, but we might dip back down into this box again. And if we do, I'm going to be buying altcoins heavily again. Anything inside this box. If it goes below the box, that might be a little bit more sketchy, but we ultimately have until September before I really am going to be losing faith in the altcoin market altogether. But I mean, for now, it seems like it's holding above the box, and it's attempting to hold this area of support here between 180 billion and 182 billion on others, maybe these local tops here. So the altcoins, they're having a drawdown, but they're not getting killed completely. If anything, this could end up being another higher low and just a nice red day. A lot of stuff was down like 5%, some stuff even 10%. Red days are great for accumulating. So just accumulate some more coins. Don't go all in, obviously, but the trend could be changing here. I mean, I'm not sure if I'm too convinced. We might end up getting, you know, another dip down, and it's just a perfect reaccumulation, you know, mindset. To like if your mindset is to accumulate more coins, it's just going to be, you know, a better opportunity to do that over the next coming months, I think. So yeah, altcoins, you know, what I'm doing is I'm collecting them. I'm buying as much as I can, and the prices are pretty low. So on red days like this, yeah, like I usually buy. Even if the price of Bitcoin does go lower, you might still get some cheaper altcoins, but it never hurts to sprinkle a little bit in when you see it, when you see the chart sort of making progress like this, you know, slowly but surely. It's a bit of a stealth move that could be building, and sometimes it goes nowhere, honestly, and then you end up eventually just putting in a lower low. Like this sort of did the same thing, but buying down here was not the worst, assuming you were willing to sell right here, or at least take some profits off the table in the interest of reaccumulating at these levels and these levels and these levels. So anyway, I mean, I know most altcoins are really super oversold anyway as it is, and I will do an update on altcoins. Actually, I was asked, I had a few altcoin requests from some other users, some friends, and watchers of the channel. I had some altcoin requests coming in, so I've got a handful of alts that I am planning on doing some TA on, and that will be coming soon. I'm not going to do it in this video tonight, but that will be coming soon, possibly even as early as tomorrow morning or tomorrow afternoon. So stay tuned for those, the TA on those altcoins that I got requests for. And then this is something I wanted to mention just real quick, was that I think I was talking with some friends earlier. I was saying, like, you know, I think the miners are really hurting right now. I think part of the problem is that the miners are just hurting so bad, and the part of these dips, I think, or these bigger dips, I think that the Bitcoin miners are partially responsible, because they could be capitulating to some degree. Look at, when I found this chart, I'm looking at it, and it says that back at the end of April and beginning of May, you know, your average mining cost for a Bitcoin was $89,000, almost $90,000. And I mean, look at what happened in April and May. You got these big sell-offs, you know, but you know, by the end of April, the beginning of May, you're getting these huge massive sell-offs, because it's like the miners, they have to sell they basically have to capitulate because they can't keep up with the cost anymore. They have to come up with some money somewhere. So the only way to do that is for them to sell some of their Bitcoin holdings. So it is a bit concerning to see that the mining cost of a Bitcoin is exceeding the USD value. I mean, hell, right now, see if I can get the closest reading. August 10th, the average mining cost was 81,196. Now, I don't know exactly how accurate this chart is, but I just found it today. I mean, it's from macromicro.me, apparently, macromicro.me. So I don't know exactly how accurate this is. I was just looking it up to try to figure out if I could get some more info on what the mining cost was. But I mean, if it's I mean, down here this is saying average mining cost for August 5th. Let's see the closest we can get. August 10th, average mining cost 81,000, and then Bitcoin's at like 60,000. So I mean, what would make more sense? For them to really be like, okay, we're gonna continue to pay an extra 20,000 in order to get each Bitcoin. You know what I mean? They're better off just being like, okay, if it's as long as it's trending down, might as well stop mining, sell some of what we've got, and then try to buy it back lower and try to buy it back cheaper. I mean, because if you can buy it cheaper than what it costs for you to mine it, then why even bother mining it and putting in all the extra effort? So miners could be capitulating, selling off some of their supply, and they've halted their mining operations because it's just not profitable at this time. When we do go back into price discovery, it will be profitable again for them to mine, because if the price pushes past 81, 82,000 and goes up towards 100,000 and even beyond, it's going to be profitable for the miners to start mining again. But for now, it almost makes more sense for them to be selling and trying to buy back cheaper, if they can help create that dip, I guess, per se, get a cheaper price. You know, and then that opens the door to a pretty scary scenario that I was talking about earlier, where we were talking about a potential flash crash down to some much lower levels. And like, I don't even want to mention them because I'll sound crazy, but potentially a flash crash down to some much lower levels. And if you guys want, I'll go into like a more in-depth with that in another video potentially. But for now, I just wanted to mention that like I said, I don't know exactly how accurate these stats are on this website, but I'll continue to look into this, and I'll continue to follow up on what I find as far as the Bitcoin mining cost versus the Bitcoin USD valuation. So last thing I want to mention is just that we had that big uptick in daily exchange volume, but it seems like it has dropped off a little bit. It's dropped back down to this. It was up to 60.2 billion. It's dropped back down to 56.42 billion. The 7-day moving average has. But that one good big tick up was good, and really pretty much as long as we're staying above 34.9 billion and 31.4 billion. Ideally, we want to stay above those levels. We'll start seeing some higher lows being put in on this chart as far as the daily exchange volume for the 7-day moving average. We want to continue to see this chart trending up if we want to start going into price discovery, or really any volatile price movement at all. So anyway, that's what I got for you guys. I'm sorry if it was not exactly concise when it comes to where I think the price targets are going to be, but I mean, in a nutshell, we're losing this box. If we lose this box, probably like expect this box if we don't get a strong reaction at 57.5, which we might not, because there's not too much structure that's been built up there. There is some. You know, you did have these two hits here, so you could see a reaction there. But if not, probably expect some more downside to that 54 area to try to sweep this liquidity that's down here before we continue up, because again, like I said, 67k, there is still that hot spot there. So anyway, you might have to expect some more down, some more sideways, or you know, maybe that was it. Maybe that's all we get, and the price bounces as soon as I finish up this video. But anyway, that's what I got for you. And yeah, I'd appreciate it if you could hit the like button and subscribe to the channel if you haven't already. And remember, I'm going to be releasing that update on altcoins pretty soon, so stay tuned for that. But until then, take care, guys. Hope you have a good night. Peace out.